Let's go across to the management at Asian Paints. Mr. Amit, MD and CEO at the company, is now with us. Sir, could you start by the 34% volume growth that has come in on a 11% base is quite impressive. How much of the demand in the quarter is pushed back from the last month due to COVID lockdowns? How do you see demand panning out?
So overall, what we see is that when we look at the entire quarter, the volume growths, as you rightly said, have been very, very strong. And it's not only the volume, we have seen even the value growths being very strong. One of the big things which we have been seeing is that this year, unlike the last year, the metro T1 and T2 cities have batted very, very strongly. The demand sentiment in the bigger cities have been pretty good to that extent, and that has really accelerated the growth because they have far surpassed the growths as compared to the T3, T4 cities to that extent. It has also kind of really given us a leeway with respect to the premium and the luxury products to that extent, and that's why you see that the difference between the the value and the volume growths is not much. Overall, both are very, very healthy in terms of what we have seen. And therefore, what we feel that this is a very, very strong trend which is coming in to that extent. What we've also seen is that the entire project sales, which is the institutional market, has also been strong. Real estate has been picking up. Construction has been picking up to that extent. And that has also really contributed to the overall growths which have come in to that extent. I would not say that there is too much of a pent-up demand. I think possibly to some extent in the month of July you would have seen, but I think across the 3 months we have seen very, very good, healthy volume growth to that extent. So we feel that there is new demand definitely which has kind of come in at this point of time. Because if you remember in quarter one, largely it was the month of May which was affected very strongly. We kind of fought back in June, and I think June growths were good. So overall what I see is that the sentiment has been much better. Overall, I think market conditions have been great. Monsoons have been a very, very positive sentiment. So overall, I think all these areas have contributed to a very strong volume growth. And in all our segments, which are our new forays, we have done extremely well in terms of contributing to this volume growth.
Good afternoon, Mr. Syngle. This is Cheryl also joining in the conversation. HUL has actually been pretty cautious on the rural recovery. What's your outlook in terms of rural, in terms of volume growth in particular? And also, are you in overall confident of a double-digit growth in H2 given the high base?
Okay, so what we see is that we have a very, very strong footprint in all the rural markets and the urban markets, as we kind of say it to that extent. And we have been expanding our footprint there in the last 2 years very, very aggressively. The overall monsoons have been pretty good. That is kind of strongly reflecting on the, the whole agrarian income in terms of what we see. And there would be a good harvest, and the agriculture income would be definitely good. So we are betting on very, very good growths in the rural as well. And what we see as a trend in H1 also very clearly, while T1, T2 cities have done well, it is not that the T3, T4 cities have not done well. They have relatively been lower, but I think the overall growths have been quite satisfactory in terms of what we see. So going forward for H1, given the fact that the consumer sentiment is good, there is a monsoons which has been very, very normal and very good. We think that the H1 overall volume growths definitely should pan out for the rural markets also in double-digit growths. There is no reason why the rural market should not be batting.
With a lag, do crude and other prices reflects in your cost of production? What is the rise witnessed in Q1, Q2? How do you look to maintain operating margins going ahead?
Okay, so when we see Q1 itself was about a 15% increase from the Q4 of the previous year in terms of inflation. So that was a whopping increase, and this was an increase across the raw material set and so on and so forth. And it was not unusual only for India, it was happening across the world to that extent. And in Q1, we took definitely some preemptive action in terms of taking price increases to kind of address this, but obviously we didn't want to destabilize analyzed the market and we took price increases to a certain extent. Going into the second quarter, the inflationary trends continued and we had another 6 to 7% hike in terms of the overall inflation going forward to that extent. And what we see is that this inflationary trend is continuing well into the Q3 as well to that extent. And this is across the broad spectrum of raw materials in terms of what we see very, very strongly. What we have done in Q2 also, we have taken price increases which are there, and the going trajectory forward, we are taking very, very concrete steps in terms of how do we address today this whole area of about 18 to 20% inflation which is there, which is really unprecedented in terms of what we have seen in the last about 40 years. What we are doing is taking a series of price increases further in terms of really seeing how we can address the gross margins. We are looking at very strong initiatives around how our product mix goes forward with respect to the premium and luxury range so that we are able to get higher margins from higher value items which are there. Third, we are looking at formulation efficiencies in a very, very big way. We have done a lot of work in the last 6 months in terms of looking and bringing innovation with respect to technology, both in terms of formulation as well as manufacturing. And it has given us very good results. And that's another direction forward in terms of what we are taking. And lastly, focusing on cost control in terms of what we can bring down in terms of our efficiencies without really affecting the market sentiment in terms of going forward. So I think those are the series of actions we are taking, and we are pretty confident that as we look forward, we should be able to quickly get our margins in the range of 18 to 20% PBDIT to the sales overall to that extent. And that is something which is an endeavor which we are very strongly taking.
Mr. Syngle, you've definitely paid emphasis on the fact that you are seeing the inflationary trend continuing in Q3 onwards. You've also said that you are looking at taking a price hike as well. So what is the range of price hikes that you are looking at and what sort of range can we expect for the next few quarters in order to mitigate this high inflation that you're seeing?
So overall, we've taken about a 7.5% overall increase over the last 6 months. As we go forward, the pace of increases would be definitely a little bit more higher. It will be far more strategic from the point of view of seeing in terms of which are the areas which are getting more affected as we kind of look at the entire product mix going forward to that extent. But as I said, price increases not alone would be the only strategy being taken forward. We will definitely look at a lot of other areas as I kind of enumerated so that we are able to kind of give a very strong trajectory to the overall margins to kind of bring them back on course.
How sensitive is the Indian consumer to price hike? Premium has now only started to recover. Will the recovery get halted or delayed if the price hikes have to happen?
See, I feel that there is an overall price elasticity which kind of really exists as far as demand is concerned. The price elasticity is more towards the economy set of products and not towards the premium and luxury products in terms of what we see. So going forward, definitely we see that what we are going to balance is in terms of saying how do we take increases so that the market sentiment is not really greatly affected. We are able to kind of really pursue our overall growths, which we have been pursuing for the last 8 to 10 quarters in a very, very strong manner. They have been double-digit growths, and we keep the healthy growth trajectory because we feel that on the longer run, I think it is good to kind of concentrate on the medium to long run overall strategy rather than kind of really hasting and curbing everything down for just 1 or 2 months in terms of taking a recourse in terms of treating your margins in a certain way. So overall, what we see that there would be definitely some demand elasticity which would come in, but we would like to kind of see that we have other measures and we grow other segments so that we kind of keep the volume trajectory on in terms of what we have been doing so strongly for the last about 2 years.
Mr. Singhal, what is your outlook for waterproofing, and what is the current size of the business? What are the new segments in waterproofing as well as construction chemicals which your company is actually planning to enter, as well as are we actually seeing you gain market share from industry leaders in these particular segments?
So I think we have reason to believe that for the last about 6 to 7 years, we have done a very, very strong work in the entire area of waterproofing and construction chemicals. We have really now gone into the entire range in a very, very big way. So whether it is the whole range of membranes or in the range of admixtures, I think we have got into a full-fledged portfolio of waterproofing to that extent. The growths have been really spectacular. Even this year, we have doubled the growth rates in terms of all our waterproofing range. And now the waterproofing range is a sizable contribution of the overall turnover of the organization. And we think that today there has been a huge amount of share gain over a period of time in this entire segment. And that is something which as a foray will continue, because we think we as one of the bigger players in the industry would be able to kind of really expand this market. And there is enough scope and potential in terms of doing that.